STM is in a very unique situation. It seems to be a value play in both the semiconductor and tech field, which right now is very rare. That's driven in part by recent earnings, which weren't particularly great, but to me don't reflect the business as a whole, but more short term. I say that mainly because revenue dropped a little bit, 10 to 15% in some of their areas, the specific components they're selling. They are a semiconductor industry, but they do lots of different things in that field. And it seems like revenue being down wasn't the main driver, but profit margins were down significantly, as much as 60% in some of the areas. And I don't think that's gonna happen. And many others were down as much as 30% year over year, which is strange. You usually do not see that. They didn't really give clear reasons. Maybe they did in the earnings call. I didn't read through that, but at least in the statement there wasn't much. But I'm guessing it's probably a combination of a few things, right? But usually I don't look at all the earnings in depth, but I think it's important for this. You can see the earnings per share are roughly the same as quarter 3 2021, but all throughout quarter 4 of 2021, earnings were significantly better. Earnings per share, that is. Like, we don't see much of a revenue drop off. I mean, there's a drop off there, right? Quarter 1, quarter 2, but mainly profit margins were just hit significantly. And usually that's short-term headwinds. Something that quick and that dramatic, right? That's what I'm looking at. Over the last 5 years, it's quote-unquote underperformed the S&P 500. But if you look at highs, even as little as, 10 months ago, you would have done significantly better. So I don't feel like that's a particularly fair metric to look it out. To view it as, it also pays a decent dividend, roughly the same as the S&P 500, so an average dividend. But going off of the earnings, and I'm going to talk earnings a lot because that's what I feel is the most significant with this company. Why it's in the position it is. I mean, the share price is halved, like I said, within about 10 months, roughly. I do like this stock. I like this stock for a number of reasons. I like the increasing dividend. I like the value play for it, right? If you're in tech and you're more of a value person, if that's your thing, or if you aren't, if you are not properly diversified in that sense, this is a good play. And I think it is. It's a good investment, play. It sounds more trade-ishy, and I mean I do view it somewhat as a trade, right, where I would invest more, just betting on the fact that it's going to recover back to normal levels, right? But it's not a bet, it's still an investment in the company, and I wouldn't mind holding most of those shares past the recovery, right? But what you're looking at right now, at least in the short term, meaning 1 to 2 years, is that they can get it back to the levels they were. And if that's so, you're going to do great. And I'll tell you why. Because if they make the money they previously were, the stock would be trading at about 8 PE. And if they get to that level and say, hey, we're going to grow even at a modest 5 to 10% rate, that doesn't justify a PE of 8.69. It would probably at least be 15, right? So double. So if assuming this can hit levels that it was at, if it can recover, I assume this is analyst estimates, I think, for the rest of the year. This is baked in, but these 2 quarters afterwards, I don't know if we've heard from the company. I haven't read through their earnings call in depth, but there was nothing in the earnings statement last quarter that I saw. So there is a lot of upside here, right? And you may say it's low risk. However, one of the stocks that had the lowest PE, basically what happened, I bought it at about 12 PE. And you're like, okay, even if they have a couple bad earnings, clearly they're expected to go sideways, right? Forward PE was about the same, 12. Like, it's just, even if they have a couple bad quarters, probably go sideways. It's currently sitting at about 5 PE right now, 5.5. 5.5 forward PE as well. If you're interested in that company, it's Adcore. It is a smaller company, significantly smaller than STM. And STM isn't a super large company. Its market cap is $25 billion. But if they do continue to do significantly worse than expected, even though the PE is low, it will continue to fall. So I'm not really looking at, a value play in the sense that it's supremely undervalued. But I really like the idea. If you like this company, if you like what they do, if you like the message, or not the message, you like the company, you like the leadership, you like what they sell, you like how they operate, you like where they operate, and you don't own too much. The only thing I would be cautious of, right, is you can always get over invested into a company, right? One of the worst, and it happens. I mean, you can see it in so many where people will just invest and invest and invest. My dad, who is likes stocks as well, he's an economics teacher, but he has a story about this dude he was working with at a law firm. He was a lawyer before, and I think it was Xerox. I'm not exactly sure. I'm not even sure if they're public anymore. I don't know. I don't know what it's about, but basically it was a company that was huge forever, and this old dude was like, yeah, they're gonna turn around. They're gonna turn around, and he just kept pouring more money. So the point is, if a company is just really going downhill and you already have a lot, let's say you already well invested in this company, I would maybe put a little bit more, but I would probably just let it run, right? Not worry about it. Maybe like I said, maybe put a little bit, but if you already are heavily invested in this company, I wouldn't double down. I would just let it ride, see how it goes. If you still like the company, right? But if you don't have it, or you have a smaller investment, or you wouldn't mind your investment growing, this is a great time. I personally do not own this stock, but I'm definitely eyeing it. It's definitely on my short list. I have so many semiconductor stocks. I have so many. I have AMD. I have SMCI. I have AMAT. I have ASML. I have TSM as my number one holding. Right. I have other tech. I'm super high in tech. Like, that's the only reason I don't have this company. Well, two reasons. Capital, capital's finite. And three reasons. One, it's foreign, so that adds it for me. ADRs have some fees associated, at least with Schwab, which is generally what I use. Two, capital's finite. And three, I'm very heavy invested to the semiconductor industry already. And tech in general. So those are the only reasons I have. Other than that, I'm eyeing it, right? If they have a decent quarter, right? Especially another two. If they have the issue is, right? If they get here, quarter four, they're going to guide for next year, right? And if they guide really well, it's all going to get priced in, right? So I'm thinking maybe in 2 or 3 months, right before quarter four earnings, assuming this is a decent quarter. But then again, I don't know. I don't know how to play it. It's in such an interesting position. However, the main reason, I like it for two reasons. One, I love the semiconductor industry. I really like how they're in, I really like vehicle, automotive. I own Qualcomm mainly. Qualcomm's another one I own. I own Qualcomm mainly for the automotive industry. I mean, they've been doing well in other areas, and that's awesome. But they're just in every little thing. ASICs. I work with a lot of those with my job. I don't think it's their ASICs. I hope not. That would be not good because I work. Yeah. Anyways, we're not going to dive into it today. Yeah, I think a lot of the down, if they can level out, right? If they level out, there's not a whole lot of future growth baked in. So if you just think they're going to get back to the other levels, they'll do fine. They really will. It'll shoot right back up. So now let's look at some other things. Schwab thinks it's going to do 50 percentile, which you may say that's not great, but that's actually pretty good because they think it's going to perform, the average stock, goes up 5, 6, 7, 8% every year, pays a decent dividend. So they think it's going to do fine. A C sounds bad because we're thinking of grades. And really a C for a stock rating isn't terrible. Narrow. I hate the 0, 3, 10 scaling it seems like they use. Yeah, they're fairly small. That's the biggest thing, right? So I'd give it a 5 or a 6 probably. Forging partnerships and all that, but they are STM, excuse me, is a decent part of the and also one thing I want to mention, for me it's foreign, but if you're in Europe, that's an advantage, right? Generally, I mean, US companies have dominated as of late. However, it's still an advantage if I don't know all the rules, but I'm sure in EU it's much easier to buy. I think they're based out of Switzerland. I saw something about the Netherlands, but I think, yeah, they're headquartered in Switzerland. I don't know. When I was reading up on them, I saw something about. But anyways, I assume they're EU. I'm not sure exactly how markets work there, and I don't really need to, because for me personally, it doesn't really affect me, right? They also do really good ESG. This one thing I kept seeing is they were seemed really high in environmental and things like that. So if that's important to you, that's their A plus there. I'm not sure. I don't really get this element, right? This I get, right? But this I don't. How can you be a 6.4, 6.8, 6.5, and then a 9.4, right? I don't know. But anyways, yeah. Sure, I would agree. Europe's probably 7 or 8 out of 10 if America's a 9 or 10, and that's not just because, I think America's great or anything. It's just look at where all the market cap is concentrated. It just is a fact. It's in the United States. So, yeah. But to wrap, I like it. I like this company. I feel like they'll do good. I feel like they'll be successful. I'm eyeing it. I do not personally own it. However, you have to always do your own research and factor in what amount of risk you're willing to take in any stock. There's always risk, overvalued, undervalued. This one's erring on the lower side. Like I said, do some research into it. But this is definitely a stock I would keep my eye on. Certainly if you like stocks with lower PEs and in the tech range, so much of tech is quote unquote inflated. It's just high. I mean, historically it's high. Maybe it deserves that. I'm not arguing one way or another, but that's up for you to make. But anyways, I appreciate all of you watching this video. If you made it this far, I'd appreciate if you left a like, subscribe, let me know what you think, and I will catch all you guys later. See ya.